there's no doubt that the intervention of central banks globally, the Fed, the ECB, in shielding bond markets has been enormously successful in allowing these more challenged companies to come to the bond market. I mean, central banks are telling the markets, look, we have your back. We will make sure that we are a lifeline to those companies that really are running out of liquidity. And we will stem the rot in this sell-off. And they've been tremendously successful. I mean, the corporate bond market in some places, such as US high yield, the retracement from the recent wides has been close to 50% of the sell-off. I mean, this is ironically one of the shortest bear markets that we've ever seen, but it's one of the fastest and most aggressive recoveries. And it is in very large part due to the intervention of central banks.
Barnaby, I'm really confused because last time round when we had central banks and the ECB buying bonds from corporates, they were buying investment grade. They were buying companies that probably could have raised the money anyway at incredibly low coupons as well. This time round, they seem to be going a little bit more indiscriminately. Are they setting themselves up for central bank losses because some of the companies they're buying, basically the business models are temporarily at least broken?
Well, again, it's the counterfactual. If you're a central bank that is on the side of caution and says, look, I'm like the Federal Reserve, I'm not going to do this move into fallen angels. I mean, obviously the Fed did. But if you were to make that point and say, look, our red line is here and we're not going to cross it, you've got to weigh up the economic impact down the line. And so, they are the guardians of stability. They do realize that that the onus is on them and they're quick enough to intervene and they're creative enough to come out with these policies. I believe the central bank community is sitting down and having a long, hard, reflective moment and saying, if we don't break taboos here, if we don't cross the Rubicon with new policies that we've never done before, this will come back to bite us in terms of a very, very minuscule recovery down the line. So they're having to cross the Rubicon. And yes, it sets them up for more risk down the line, but their job is financial stability.